I'm investing $200,000 in the stock market, selling stock option contracts all in one single day. Let's jump in. I keep my stock option portfolio on my Robinhood account. Yeah, I know a lot of people dog it, but I'm not a day trader per se, so I don't need all of the quick timing. It's just the UI makes it so simple to get in and out of trades that I enjoy it. Now, if you look, you can see that there are still some options here that haven't sold yet just because I sold them farther into the future. That was something new that I've added this year. And so while I plan to sell $200,000 worth of options, it looks like some of my stock options fell out of the money, meaning that the stock option contract didn't execute because the price of the stock was out of the money or below what we had predicted it was or sold that contract for. Not only that, if you look on the right, you see some dates for options here that haven't sold yet. That's because those are in the future. Over the years, as I built this portfolio, I've learned not to wait on a specific date to sell all the options at once, because some of those price targets that you're looking for haven't hit yet in the specific time period. So I've learned to take advantage of the stock price whenever it hits the target and then sell those into the future regardless of when the expiration dates are. Mainly because over the years I've learned to pick a certain amount of stocks and stick to those and build a relationship with those and learn what their patterns are. That way, when you see that a stock that you like is at a certain price target, you pull the trigger without worrying about what time it is, knowing that you believe in that stock, it pays dividends, and you're willing to hold it for a long-term future. And so that brings me to the first thing that I do. I have now picked the 20 stocks that I'm going to be following or investing in during this year. Over the years, I've built a relationship with a certain amount of these stocks, as well as now starting to add new ones depending on how I think the market's going to go. But there are some things that I always look for. First, as you're building your 20 stock portfolio, you want to make 5% trades per stock. So for example, if I have a $200,000 portfolio, I don't want to invest more than $10,000 in one particular stock. This helps diversify and hedge your risk. Now, if you notice here, I do have 21 stocks out of 20, and that's because as I go throughout the day, I'm going to notice that some of these stocks are not going to be in favorable positions. So at the end of the day, once I sell the first 20 stocks, then whatever's left out, I won't invest in until maybe I see a much better position during the year, but try to stay within those 20 stocks. I'll likely eliminate it and then wait for next year to see if it's in a favorable position. The next thing I look at is, does this stock pay a dividend? This strategy that I use, the covered call options, don't always work out in the way that you want. Look at this in particular. If every strike price had been met, I would have $0 in investment and I would have $200,000 in cash. But if you look, I still have over $100,000 in investment, meaning that over half of those fell out of the money. And so now the question is, since you're caught holding that stock, how long are you going to have to hold it? Well, this is why I look to make sure that these stocks pay a dividend. That way, I'm not worried if it falls out of the money and I have to hold this stock long term. Because remember, I chose these stocks because I believe in them and because they pay a dividend, so I can hold them and still earn income, as well as sell that call option. And if it expires out of the money, then this year, like now, I still get to sell those call options for a year out. And those could pay a huge premium depending on how far out of the money I actually am. And the next thing is, it has to be volatile. It has some volatility or some demand for those stock options. There are some stocks that you simply just can't sell options on because they're not as popular and they don't sell yearly contract options just like you would like. There are some stocks within this portfolio that you will notice lack demand, meaning that I'm not allowed to sell the yearly option. And there's reasons for those stocks. And as I go through them, I'll explain why. All right, I think we're ready to jump in. So first, I want to see what stocks I own and sell those options to see how much cash I'm going to generate from selling all of those stock options. Because the more cash that I generate off of those stocks, the less that I have to take out on a margin loan to get to that $200,000 threshold. Also, another thing that you're going to notice, some of these stock aren't in my top 20 portfolio anymore. That's because they were, and as these portfolio developed, I slowly eliminated the ones that didn't fall into my criteria. However, I don't sell stock at a loss, which means that I'm keeping them in my portfolio and still selling those options as far into the future as I can to capture as much of the premium until that stock exceeds the strike price and gets assigned. Once they're assigned and sold, I don't plan on buying them again unless they fit into my top 20 portfolio. All right, so let's start off. What I'm going to do is I'm going to open these and slowly go through them one by one. This is a long and lengthy process, but this is how you can make some serious revenue. This one I don't even owe 100 shares anymore. Did O? Oh, it's flag. That's O. VIX. This one only 18 shares. These happen when you have reverse splits. Snap, Help. Used to be Cybin. That's a psilocybin company. LTC. Wow, this is at the ideal price range. $50 out of the money. That's going to be a huge payout. Maybe 20-30% payout on that one alone. DK, I might, this one's not doing so well because of the prediction markets. But DraftKings is no longer in my portfolio. Funny enough, there's a reason. Workhorse only has 7 shares. This one I used to have 1,800 shares of Workhorse, and it's reverse split so much that now I only own 7 shares. All right, let's start. Okay, so American Airlines is not in my top 20. I've had it for so long since I started trading it. You can ignore these values. These are just not accurate because they don't include the premiums or the money that I made from selling the options. So these could be way higher than what they actually are, or lower, because I'm usually buying the stock option at lower prices in between. So for example, this is at 15. I might buy 100 shares at $10 and then sell them at $11 because of where it is during that period of time, which looks like your average cost goes down, but in reality, you just sold it and made $100. So I don't trust the market value here. The portfolio diversity is really my main concern at this moment in time because I don't want this to go above 5. Some stock you're going to see where it does, and I will explain why, because it's never a perfect picture. You just want to get it as close as possible and have something to guide you when you have to make decisions extremely quickly. All right, so on January 16th, the $10 call sold, the $14 call sold. So what expired? I think it's the $20 option. This is going to get a little slow with all of these open, but it'll get faster. Mainly what I want to see is what option expired, or did we already sell it? Yikes, this is annoying. Come on. Because I have 100 shares, that means that I should have one option outstanding. Because I don't, so it doesn't want to show me what's expiring. Yeah, and it looks like I sold the $20 call option on December 27th of 2024. So we're going to sell that $20 call option again. Oh, wow. This is going to take a while. So we're going to go to trade options. And this is how you sell a covered call. Since I already own the 100 shares, you pick the date that you want the contract to expire. For me, it's going to be here, January 15th of 2027. And I already know the contract that I want to sell. So I'm going to select sell. It's already in call, and sell 20. The $20 call option expiring January 15th. And again, I'm allowed to sell this because I own 100 shares already. So what I want to see is I want to see the demand. So if you click on this, it'll come down here. And what I want to see, open interest. There's plenty of volume here. And the bid is 135 and the ask is 142. So there is a $7 slippage there. And it's currently priced at 139. So what I'm going to do is I'm going to sell one option at 139 to see what happens. It says medium fill. If it doesn't, then I will drop it down to 138 and move on. Your time is worth money. Okay, looks like it dropped to 137. So I'm going to try 138. Always make sure you review these before you sell these, because you will sell it at that price. Someone will buy it if you mess up. Okay, selling at 138. Boom. All right, sold at 138. And so just to give you an idea there, be cool. So right here it's 138 plus 138. and I will divide that. I sold the $20 call, so let's just assume that we bought that at $20, 100 shares each, 2,000. That's a 6.9% return on this stock for this year, and that's assuming that it doesn't jump up to $20, because if it goes to $20, it gets sold. And you saw when you scrolled through all the history, you saw how many times I've sold this call. So just by selling this one contract, I'm at 7%. And what I could do here, and something else you could do here, and this is what you'll see going forward, not on this one because it's not in my top 20, but you could buy 100 shares, you're at 15, and then sell the 15 or less, what profit margin you want to take, depends on the risk you want to take. You could sell the 15 and make a 20% profit off of this trade. So you average those two down, and you're at 35. You're at $35 divided, so you're at $15, $17.50 per share by buying both of these. And again, my cost basis for this is not 15. You saw it was somewhere around 11. I don't know what the actual number is. Again, don't care. When I sell the same options, I know that at some point in that time, I knew there was profit there to take. So I just sell them at the same time, so I don't have to spend time calculating what I did right or what I did wrong. So this one's done. Move on. Okay, Hawaii Electric, $14.43. That is an excellent price. Look at my average basis. This thing dropped like crazy. Oh, it's on the come up. I bought it at this point in time. Was it 2023? Yeah, I think wow, time flies. I bought it at this price here. This was around the Hawaii fires, and I knew that this price was going to come back up. There's only one big utility company in Hawaii. I'm not going to dive into selling you on the stocks, but I saw an opportunity here, so I've been bought several hundred shares. Looks like I have 2 left. See if I can see which one's expired. I don't know why it doesn't want to show me the expiration dates. You can see the ones that got assigned. See, I had one at 10, one at 10, one at 16, but I wish it would show me which one's expired. Why doesn't it show me expiration dates? That's just unbelievable. Here we are talking about Robinhood, and this is weak. Do it. Okay, so it looks like I had a 10 and a 12.50 assigned, so we need to look for, looks like I sold a 15 here, and I never bought it back, so it looks like the 15 expired, and I have 200 shares left, so this one definitely got assigned. Bought the 15, sold the 15, then I bought 100 more shares and sold the 10. So how many shares do I have left? Do I have 100 or 200 shares? That's annoying. It doesn't show me my expired calls. Yeah, I have 200 shares, and now I don't know which ones. That's really freaking annoying, Robinhood. 17 here. So I have a 17.50 and a 15. I don't see any assignments for a 15. 15.50. Bought here, sold at 15. Looks like that expired, and I only sold 15s after that. So we've got a 15 and a 17.50. Wow, so this one's at 14. So what an excellent time. So the 15 is right there. That should be a nice little premium there. And then the 17.50 is right above that one too. So we'll sell them both. See how that's in the green. Oh, that's not much slippage. That's $1 or 1 share, 1 contract option. Sell it for 63. See what happens. 5, 4, 3, 2, 1. All right. So since it let me go to 163, sometimes they only allow 5 increments, $5 increments. So like sell the 160, but I'm gonna try 162 and see where it takes me. Drops down to 156. I'm gonna try 160. All right. Now it's down to 155. Looks like the stock is falling. So do 158. See how it keeps dropping further, because the bid is still at 150. So I'm trying to see if anyone will bite at a little bit higher, but looks like 155 is going to be the number. And this goes to show you, these are the stocks that aren't as popular, right? Sometimes these orders will get filled immediately. So 156. All right, let's hold that. 156. So 156 divided by 1750. There's a little 8.9% return. 156, add that to the counter. And now we've got to sell the 15. That's a nice little 240. And this one will probably be in higher demand. Go 239. Because, you know what? Let's go 240. Because it is closer to the money. This could be in the money tomorrow. 240 sold for 240. And so that one, for example, that one now you're looking at 240 divided by 15. That's a 16% return right there. That's what I'm talking about. Those are the big ones that we're looking for. The goal for this portfolio is 15% per year. And so when I am looking at the stock, or when I'm slowly making all of these decisions in my head as I go through all these stock, I am thinking 15% returns. Once I've sold all that stock and I have that cash left over from selling those options, those are the ones that I start selling weekly options and get a little riskier with, to try and get it anything over that 15%. But I would be very happy with 15% a year. So that is typically where I try to stay around. Again, I'm just selling options here, so I don't really get to decide right now. The market decides. But that's awesome that we were really close on that one. Too bad we weren't closer on that. But again, that's half of the portfolio there, or half of that stock. And if you look, these diversities are just so small, because these are older stock that had just grown in that I haven't been able to sell in the money yet, but still making money. So, okay, 400 shares here. This one's going to be tough if they're not showing me my expiration dates. There's got to be something that we can do here. There we go. So here we go. We've got a little, all right, we've got an expiration chart here where you can see everything that was assigned and expired. So we're looking at HTZ. Let's find it. 15 expiration. And there's the expiration. Good. We chose those right. All right, we got HTZ. So we've got 4 shares here. I think I kept one open here in case we had an explosive year. Yep, that's probably right. But let's see. 1 contract, 2 contracts. So nope. So we've got to sell 210, 1750, and 1250. And we're not even close to the money here, so don't expect too much here. And this, again, another reason this one is not in my portfolio. All right, so what did we say? 1250, is that the highest one? Yep, 1250. So let's go ahead and sell that. 12, there's not one here, so I'm just gonna sell the 12 and make that 50 bucks right there. 1, let's go 4, 5, yeah, let's 4, 6, see what happens. Okay, 0.45, come on, give me these. There we go, 4, 5 there, add it. 112, 750, and 210. So 210s, so we're gonna sell 2. Let's try 6-1, see if we can get it. Come on, boom, sold. 122, that 123, and then we've got 750. Yikes, I don't like giving all that up. Yeah, but I can't jump all the way to 10. So 7 it is, and I'm gonna make $100 bucks off of that, over $100. So that's over 7. Yeah, let's just do the math here in a second. What's the asking price right now? The mark is at 120. Come on. Oh, all right. I'll go 119. Looks like they want 118. They're gonna try for 117, but I'll go 117. That's one. Still 119. 118. Come on. I don't have time. Give it 5 seconds. What did I say? 118. So they're gonna want 117 is what they want. All right. Any biters? 5, 4, 3, 2, 1. Okay. 117 it is. Hopefully. Yikes. And this is what you get when you play the game. Should have taken 117. Now I'm going to likely have to settle for 116. Unless these guys can get it together. Come on. 5, 4, 3, 2, 1. Okay. You win. 116 it is. Alright. Now let's just do that return real quick. 116 divided by 700. Another 16% right there. We'll take that. All right, Hertz done. Neo. Oh, Neo. This one has just killed me. I was investing in this one when it was at like $40 a share. Look at this. All the way. I've been riding this bad boy down. I don't know how much I've lost, or if I've lost, because I've always just sold really far in the money. But all right, looks like I got 500 shares. Now let's find out what I got to sell them for. All right, so we've got a 20, a 10, a 5, and an 8. Wow. Let's just see if they even have a 20 still. That's just how far the stock has dropped. Looks like 15. So what I do in this situation, just because that is such a big gap, so what I'm going to do is I'm going to add 2 of them up. So for example, we had a 20. How many? We had 2 at 20, and we had 1 at 10. So that's 30. So what I'll do is I'll sell 3 at 15. So 40, 50 divided by 3, 16, 17. Yikes. So we'll add the 40 plus 10 plus the 8. 58 divided by 3, 4, 15. All right. So we're going to sell 4 of the 15 at 4 of the options at 15, so that if it for some reason goes above 15, we cover all of the $20 options. This is unfortunate. This is one of the ones that hurt, but let's just, if you look, this is such a small part of the portfolio because these are the ones that I learned with early on. 0.22. See how much slippage there is here. I could probably go through it 23. Let's try. Yikes, all for just $100. That sucks. And again, this is one of the ones that I got, and this is one that I got rid of out of my portfolio for several reasons. One being an electric car business right now, doesn't pay a dividend, a Chinese stock. There's so many things that I should have learned early on to avoid this. All right, 4 for 22 at $88. Yikes. But at least we get to sell one at 5, right? So 5. That'll be a nice 116. And there's a 20% return on that one. But again, it's only $500. Another reason why it doesn't fit the portfolio. Just so small. I would have to buy hundreds and hundreds of shares to make it 5% of my portfolio. So at 115. Come on. Boom. Add that to the counter. Geez, 400 shares for 80 and then one for 100 for 115. See that one, 115 divided by 500. It's 23%. If only they were all there. Yikes. And this is what's going to happen. This is when you predict one wrong and it doesn't pay dividends. You're stuck in these positions and you don't know when you're going to see any of your money. So you really just got to hope. You got to send a prayer that NEO comes out of this and explodes in growth just for you to make your money back. Now, it's not as bad as it looked because, again, I was selling options the whole way down. But this is the perfect example of something that went wrong and is eliminating my portfolio because it's not going to pay any dividends. No dividends here. So it's just stuck there making very little money, as you just saw. One was awesome, the 5, but in reality is that we just sold $6,000 worth of shares that cost me $6,000 and I made $80 off of that. That's a poor return. But let's keep going. It's still only 2% of the portfolio now. That's just showing you how much it's how small it's getting compared to the rest of the portfolio. This one, another awful one. I don't even know why I did this. I really don't even want to talk about this stock. It's just awful. And it's worth nothing. I didn't really risk much. That's more than likely why I did it. But there's only really one thing to sell, I think, here. Go look. What was that one called? Origin Metals. Origin right here. 50 and 150. 2 shares at 50. So did we have 300? I didn't look. Yep. Okay. So 250s and 150. Here's an example of another one that. Here's an example of one with low demand. Notice how I can't go to the next year, and these are only monthly contracts, monthly-ish or more contracts. That's because there's just little demand for this stock. And look at these, 111. I might be able to sell these for $1. I think it's going to require me. These are the one with $5 increments that are required. I'm going to try one, but it's probably going to make me bump up to update to 5 cents, $5. See if it sells. Highly doubt it. Yeah, this will take a miracle, and this isn't even a good stock. This is one of those where I was chasing volatility for no reason. Learn my lessons. Learn from my mistakes. We'll try these. I highly doubt that these sell for 5, so these are literally going to rot away in my portfolio. Yeah, there's nothing to do here. Example of why you make a pre-market checklist is stay away from these stocks. Just because you see a 20-30% return potential, sometimes you forget to look, but there's usually a reason why those returns are that high. Riot, okay, you're at $18, and this one has been one that I have been riding with for a long time, and this is one that has just paid off. I believe I've knocked it out of my top 20 just because it doesn't pay a dividend and I don't want to keep holding it. Yeah, volatile. Crypto is just too volatile for me. I'm invested in crypto heavily, so I don't need this stock, and I invest in it in my long-term portfolio. So yeah, I mean, this is way understated. I've made so much money off this stock, but I was also buying this at like $40 or something a share as well. $70. I think it was like $60 when I was buying it, but I'm so happy that it made a comeback because I was dead in the water at like $9 or something here with a lot of shares. The fact I only have 200 This is going to be crazy when you see the expiration date on this one, though, or the expiration price. Yeah, see all these that got assigned, and then it looks like maybe 2 of them at $30 did not. So yeah, we've got to sell the $30. This is why I'm really happy, because if it's at 15 half or 18, maybe I can get something out of these. And I think I will. This stock is so volatile that there's some premiums everywhere on this. I've always made something. 30, 340, that's 10%, over 10% for holding those. I will take it. And this one might be, I can't because it's not in my top. But this one would be a good one. Look at this. Look at this. If you sold that one right here, $15 one, a 22% potential, 0.5. Make sure not to leave that out. Potential return on this one. You could go for $10 and make it 10%. That's fantastic. But again, risky. This is risky. There's a reason why. So let's go 2 of them. See if there's any demand here. Yeah, 330, 345 is the mark. High of 350. They're asking 360. So yeah, I'm gonna go 345. See what happens. Come on. Boom. Sold at 345. Cool. And those are just some fantastic returns. And there we go. That one I'm happy with. That was a good one. Medical Properties Trust. Again, not in my top 20. But this one took a huge downfall during some banking when the banks were going on a bank run because of real estate. And so I scooped up some of these thinking that this would do much better. And it has not done bad at all. This is pretty much where I predicted it would be. I think it would stay at 5. So yeah, if you look, yeah, that's perfect. I don't care about that because that happened drastically. No, it didn't either. This is around where I bought it somewhere. 24, I want to say. Yeah. Whenever that bank run happened, we can look. But anyways, we got 100 shares here. I thought these would all get assigned. But let's check it out. Assignment $5, $5.50. Wow. This is excellent. This is what you want right here. That's fantastic. A little one. Those of you guys that are smaller and want to start out with something small, $500. This is a good one. Look at that. 65. That's another 10%. And this one was paying dividends. I think it stopped. Plus, I don't know that much about this stock. I bought it because I saw a unique opportunity. But this isn't like a ride or die stock for me. So I'll take the returns while I can. And then, boom, 65. And then I'll move on. But thank you. 65 bucks. That's over a 10% return there. Take that. Genius Sports. This is a stock that I truly believed in early on because they were doing the analytics for the NFL and some other sports teams. And so I got in really early on this one. Somewhere around this time frame. Oh, no, that's too low. I think I bought it up here. Yeah, I was buying it at 20. But I stayed strong, bought more and more as it dipped. But it still doesn't provide a dividend. So unfortunately, this one has not made the portfolio for next year. I think it's called GENI. GENI, $10 expert. Oh, wow. That's exactly where it is right now, isn't it? Yes. Another good chunk, though. This one doesn't have demand for it either. Or does it? It's getting some demand. Look at that. Look at that. Nice little 20 guy. That's 20% right there. Over 20%, I might add. 15. Let's sell that. Let's go. Oh, I actually want to see what the number is here. Because this is all profit. I've made so much money off this stock. 21%. Almost 22% right there off this trade. That's $200 in the bank. Let's go. All right. FUBO. FuBo had a nice little breakthrough, I think, last year, maybe the year before when it got acquired by Disney. But I have lost so much money on this stock. I actually think this is a loser. No dividend, again, outside of the portfolio. I know it shows all that because, geez, man, like this is another one. Yeah. Best in stocks that you know what's going on. The only reason I knew about this one was because they were supposed to get into the sports gambling space. But it looks like they didn't. I'm not sure. But let's get rid of these. FUBO. I know I have a bunch of these. Or let's see. FUBO. Ouch. 7, a 4. 3 at 7. 1 at 450 and 1 at 4. Jeez, that's a lot. That's a big loss here. I don't even know that we'll have 7. Oh, we do. And got some dip. Wow. This one might be a good one to make a bet on just because it's so. They've got some premiums up here. There's a lot of people still expecting that this could run. 60 people here, 18,000 contracts in open interest. It's a good one to look out on. All right, so I'm going to go ahead and sell 3 of them. Not what I want, obviously, in returns, but it is what it is. Can't pick them all. And again, I've had this stock for years and I'm still making this money. So who knows if I'm actually down? I don't know. That's 21. That's 2,000. I'm going to make maybe 1% in a year. That's tough. I don't know. Don't know about that one. What did I sell it for? Limit price at 28. We'll go to 27. Call it a day. Nothing big here. 80 bucks for 200. Oof, that's rough. That's all where all that 20% that we just showed on some other stock goes. Gone. Back to 10%. Okay. So those were 3 there. 1 for 450 and 1 for 4. Those would be a little bit juicy. That's 10%. Okay. I'll take that. 10%. Again, the goal for the year is 15%, and if we can get the 10% by just locking in all of this cash, let's go. 10% on 100,000. That's a 10,000 to play with, and then the 4. All right, 51. Let's go. All right, so now we have a 450. It's 4. Let's go. Did that sell? And there we go. All right, next, Clover. This one's another one. I bought this one. I bought CLOV when SPACs were super popular, and this was the SPAC that I chose and pretty much lost a lot with. Now, I don't know where we are because it did have an explosive like 200% run there at some point. I guess you just saw it there. Boom, came back up, but I don't know where I'm at currently. I'm happy if this is where I'm at, but I think I'm in a bit more of a hole with this one. CLOV. Okay, all 5 contracts at 550, and that's at, what is it right now? Oh, wow. Much better than I thought, so I'll take it. 550, 30, okay. Not quite 55 would be for 10%. So 5%, I'll take it. More than 5%. We'll take that. Everyone buy it 30. Come on. Yeah, I'm not even going to play with that one. There just can't be too much demand here. All right, 145 right there. That's not too bad. Way better than I expected. And these are the loser stocks. Nike. All right, so this is one of the biggest losses that I had last year. Just look at this. This is as we get into the bigger stocks. These are the ones. This should still be in my top. Yep, still have it in my top here because I do believe in Nike. I think they can turn things around. It's one of the best companies in my opinion, regardless of the trends going in and out. They own so many other brands that I think they're okay. I think the Chinese tariffs really took a hit on them, but I think long term these guys will be fine. At least I'm committed to it. If I take another loss of a year, then maybe I got to get out. If you look already, you know, I haven't added the extra 100,000 yet, but this is 15% of my portfolio, so I've got to get that lowered. This was the biggest play that this and UPS were the biggest plays that I had, and they can take you down if you take these risky plays like this, and I did pay the price. Really hurt my earnings, but it pays a dividend, so remember that. Remember, if you had to be stuck with a hold, I'm okay with a $123 dividend every quarter. Not bad. Okay, so let's see where we're at here. This one's a tough one. What's Nike? Yeah, NKE. So a 70, 75, and an 85. That 85 is going to hurt because I'm at, oof. Okay, let's just go. Let's go look. Can't be that bad. Oh, okay. 5% plus a dividend. What is that? Actually, that is not 5%. 345 divided by 8,500. Oh, 4% plus 2.5 dividend. 6.5%. That's brutal. That's brutal because that's 5% of your portfolio right there, and you're only going to make 6% off of that. So this is a shot. This is why you have to be very careful, not make those 15% mistakes. Make 5% mistakes. I'm going to put it at 45. I think that's a big slippage amount, but let's see. I don't even think it's going to be this. I think you get down to 300. Okay, 325 is not so bad. It's a lot of slippage here because it's so high up. The bid is 310 and people are asking 385. That's big gap. Put 340 here. Yeah, I could sell at 340. Come on. Yeah. 340. All right, lock that in. And what I'd say, 75 and a 70. Yep. All right, 75 won't be so bad. That's almost 0.5%. That's almost 5%. So take that. Not too bad. We're still getting the cash that I can use to try to make an extra 15% on. So it could make up for it. And this could be the year. This could easily shoot back up to the 80s. And both of these cash out in the 70. That's 10%, over 10%. That's 12% on this one. So it's not all bad. Not all bad. 7.27. Oh, it's got to be 30. Okay, so we got to go to 25. 25, not bad. You do that. Let's do the average percent return here because this is a tough one. So we got 8,500 plus 7,500 plus 7,000, 23,000, and we made 340 plus, we sell 75 for. Let's put 565 plus 725. 1630, that leaves us at 1630 divided by 23,000, 7% plus the dividend at 2.5. So you're at 9.5% on 15% of your portfolio. And I was given $1,630 to play with on other stocks. Maybe even buy it at a lower price. Since I'm here, what are the odds that it could drop from 85 to below this, to below $50? Who knows? Let's see what's a good price. 460 this year. I mean, how much more can it keep going? This is 11% return. That's why I love Robinhood, because it gives me this percentages here. 9.5% here for two. I'd probably go here and take the dividend, which puts me at 10% if I decide, but let's keep moving. MGM, this one I've been trying to get rid of as well, and I just have not had any luck. I just haven't had any luck. I've been trying to get rid of this stock for a while because it just doesn't pay dividends. I'm at 5%. Looks like one of my options did get assigned though, so that's exciting. But this one, I'll probably be in this one a while. It just fluctuates so much. So my 25, that's what I sold last year. And the 35, oh, that was December 19th, 2025. So really I haven't been able to play with this one that much. But looks like MGM at 25 sold. I'll probably jump back into that one later just because I might as well make money off of this. It's at 45 and 40. Let's see if there's much money to make here. 45,200, and see, it doesn't pay a dividend. This is just awful. I'm going to have to average this down and get this out of my portfolio. Hopefully this year is just a big year for casinos and I can get this off of my portfolio. I'm going to try 190. I know it says 185 there, but how did it drop down so much? Boom, 190. Done. And now let's sell this 40. It's almost 10%. Less, probably 7.5% with no dividend. I hate that. Update to 315. Let's do it. Let's see what happens. Come on. And bought. Boom. At 317, actually. I should have put it higher. You can always put the price, selling price above these, depending on what the ask price and the bid price is, because there's slippage in there. A lot of people can't agree on what the price should be because of time is really for me. I'm not going to spend so much time here to make an extra $5 over the span of a year. So I just move on. But I could sell the 25 here. Let's see what we're at here. I could sell the 25 and make 6%. So I'll probably do that just to continue hacking away at this. Hopefully this executes all these contracts above 45. That's just the name of the game. All right. Virgin Galactic Holdings. This one is space, right? This one I bought during the big space race, or when they launched the first people to the moon. And it all became a big deal, but I've lost so much money on this stock. I own 100 shares. I don't even know what price. At $20? Yeah, okay. It must have been a reverse split. 15. This is such a small part of my portfolio. So what I'm gonna do on this one is, my average cost is $428. So what I'm gonna do here, this is a unique one, but I'm just gonna go ahead and get this over with because it is such a minimal stock for me. Well, we'll wait till the end and do this one. Okay, Realty Income. So this is one of my favorites. I plan on keeping a large percentage of this stock in our portfolio because this one pays weekly dividends. And above all, if you look at the dividend, this is a 5.25% rate, which is a higher dividend rate than the margin loan that I take out. Okay, let me throw some numbers up here. Okay, right now I make 5.25% off of this stock on a monthly basis, meaning that 5.25% is split up into 12 monthly payments. Now, on top of that, my margin loan is at right now at 4.9%. All right, now you split that up over a year and you get 12 monthly payments. Okay, so the difference of that 5.25% and minus 4.9%, that means that I am making that spread on that margin every single month. And since I don't need it, I use that to pay back the loan, the margin loan, even faster. So a large percentage of my portfolio is in these real estate stocks that pay these monthly dividends so that I can slowly chip away at that margin on a monthly basis, as well as cover that margin loan payment. Because most of the dividends that we make is what I try to pay the margin loan off with, but most of those appear quarterly, not monthly. This is why I love these realty stocks. Okay, so let's see which one's expired. So one of them expired. I think I had one at 65, which is awesome. Yeah, this is gonna be tough to find. There it is. Expiration 65. Let's go. Okay, so this is awesome. I'm definitely gonna be buying in and selling a bunch of these. Probably go up to 15% on this one. Well, right now it's at 5%. Once I buy all the other stock, I think I'll be able to buy 300 shares and keep it at around 5%, but 65. And this one does not pay really high dividends, and doesn't have too much traffic here. But again, I care about that monthly 5.25% dividend. That's where the big benefit of having this stock in my portfolio is, to cover those margin loan payments. Geez, the fact that I can just make some option returns, some option premiums off of this is just phenomenal. Awesome. All right, 190. So I mean, just look at that stock. These aren't super popular. You're not going to make a killing off of these, but this is slow, consistent income. And once I do have that margin loan paid off, that's just monthly income coming in for you. So 190 divided by 6,500. That's a 2.9% return right there, plus 5.25. Oops, what was that? 0.029 plus 0.0525. 8.1% return right there, just off of that trade. Because then you can sell these. I'm gonna definitely sell this one. Make 4.45 plus that 5.25, and you're at 10% right there. Okay, next. This, I don't own any shares of this. I'm going to see if I can just get rid of this. There was a reverse merger, I believe, here. Oh, there was a reverse merger that got rid of a lot of my stock, and then this got assigned, and it's no longer in my 12. This is another company that I bought when there was a bank run, and the old Secretary of the Treasury, I believe, Munich, made a large investment in this company, which is what caused me to invest in it as well. But I'm going to see if I can just sell the rest of these shares and move on. Sell all. I don't care. Get rid of it. Shares couldn't be located for your market order to short. Yeah, I think there's just not enough shares there to make it worthwhile, and hopefully they can just remove it off of my portfolio. That's annoying. All right, Snap. This one just did not go in the direction I thought it would. I thought that I was buying this on the low, and it just kept going down. Like they were borderline profitability here. So I just don't understand. See, I was buying it all the way down. I think I have 300 shares, 2 10s, and something higher than that. Oh, yeah, 2 10s and a 12. So let's go. While I'm at it, I'm going to get rid of the margin so we can see how much money we're making here. All right, let's go back. Okay, so 2 10s and a 12. Let's sell this. Not quite a 10% return there. That's unfortunate, but I could make over a 10% return on the 12 here. Yikes, don't you get me down to 8.2. Nice, 8.3, and then we'll sell these, which should give us around a 10% return between the three. Here we go. Yep, all right, Snap, done. Now I will not be buying. Hopefully get out of that one. Simon, I can't believe they still even let you. Oh, I still have them. Okay, perfect, yeah. 300 shares, this is a long-term play that I really want to have. Completely risky. Doesn't make sense in the portfolio, but I was really hoping this Simon would get through for offering psychedelic therapeutics. So I was a fan of it. However, this is what that gets you. All right, LTC Properties. This is another one of those real estate properties that I was telling you about, and it looks like I've already sold all these. Again, these I love for that monthly cash that is getting deposited. And let's just see what the dividend ratio is here. Where is it? Am I missing it? There it is. Don't know why it didn't show up. 6.18%. So think about that spread. A moment ago, we showed what Realty did at 5.25% dividend minus the 4.9 margin spread. Now you've got a 6.18 dividend with a 4.9 margin loan interest rate. So you're making over a percent per month on that spread. So needless to say, I have a lot of my portfolio in this stock. And every month it's helping me decrease my margin loan, therefore reducing the portfolio diversity of this stock as well, because I'm getting that in cash. AT&T, so this one got eliminated from my portfolio, really in defense of Verizon. I saw that the interest rate had gotten higher. I saw the dividend rate for Verizon have gotten higher than the AT&T, which is a little mind-boggling to me. So that's why I jumped over to Verizon. I think both of them are excellent companies and excellent providers. And perfect, had a big jump today. Let's see where I lost out on here. So the 20 and the 25 didn't sell. That's impressive. That's going to be a nice dividend. Oh, this is going to be tough. T25, perfect. This is going to be a beautiful return right here because it still pays a 4.7% dividend. So if I could get 6% out of this, that's 10 right there. If I can get more, bonus. 25, 160. Wow, bro. Yeah, it's just when you get a dividend like that, you're not very volatile. 158. I'll do 160. Yikes. Let's get out of this stock. So 125 would be 5%. So a little bit more than 5% there, plus 4%. So you're at that, let's just do the math here. 159 divided by 2,500, 6%, right? Oh, see, that's not so bad because you're at a 6.3% plus that I think it was 4.5%. So 10%, almost 11% right there. Thanks for the $159 that I get to play with and try to get another percent or two off of that. Well, 32% to be honest. Super micro. So this one is probably my favorite stock, even though it doesn't fit the portfolio or anything. This one is the one that I just got super lucky on. You know, you ever have those stocks, you can't predict the market, but this one just hit right on the button almost every single time. It's been amazing. And so looks like it sold the assignment at 32. I'm going to jump right back into this one because this is one of my favorite stocks, and I've been making thousands of dollars off of this every year. So the returns on this one is just incredible. The fact that it's at 31.52 after last year I sold the 32, it's incredible. This is going to make so much money. I already have at least 100 shares that are for sure paid for. I'm trying to get the second 100 shares paid for, and I think if I can bet on this one wisely, then I could do that this year. Real quick, what was the expiration price? It was 41. I know that for a fact because I don't trade this very regularly, only when I see the opportunities, because this one doesn't fit the portfolio either. So 41, here we go, 600. See, that's over a 10%, and look how far out of the money it was. This is one of those risky, volatile stocks, but they're in the semiconductor industry. They just had trouble with an audit, which is why they came down so much. Maybe they were just poor recording. But I've been investing ever since then, and it has really paid off. There's 645 right there. Probably could have gotten more. But look at the 32 right now. 30%, 28%. I'll likely, you know what, I'm just going to jump into this one and sell this $25 one, make 18% right off the bat, or go all the way down and lock in. I do want to get out of this stock, so I'll just lock in a quick 11%. Let's see, make sure there's not too much slippage here. There's $100 worth of slippage. I might lose $40 here, which again doesn't impact me that much. This is just such a winner of a stock for me that I'm going to buy those 100 shares right now and go ahead and knock out this position. Well, I'll wait and I'll do this one at the end as well. Move this over because I've already sold the 41. Yep, cool. So let's go. UAVS. This one I don't think has option contracts. I bought this when I saw that Chinese drones were potentially getting banned. I think they actually did get banned. I don't remember. I was reading headlines on this one. But this one seemed highly underpriced at the time. So I bought in a couple hundred shares. I have really lost on this one because I was buying it like $5 and it's just tanked ever since then. I really thought it would go up. It did close a contract recently that made it jump back up to $1.37. If you look at the last month, see, maybe 3 months now. Last month it had a big jump before it corrected, but this is a yeah, it looks like it had that big jump and then corrected. But this is, I don't know if this is the right stock to invest in unless you're a big believer in drones and this company. I don't think this has even options to trade. Yeah, you can't even trade options on this one. So this is just one I'm stuck with, and then I'll slowly sell as I make money. This says 140, but it's not. It's like 210. So if this hits like 220, 250, I'll sell all these and get out of this position. These are those positions that you get in at moments of weakness where you just don't listen to your pre-market. You realize it's such a small percentage of your portfolio, so you're like, why not take a risk? I'm not 100% against this, but this is how it usually ends with these stocks when you're just buying hype. All right, DraftKings. So this is one of my big losers here. I'm a big fan of DraftKings, but these prediction markets might take a chunk out of, are taking a chunk out of the sports betting platforms. I am curious if they're going to adopt by adding prediction market on their platform. It's really the only way. Why not? Why not? You need it. And it's still a good company. It looks like, all right, so that's maybe why we had a drop. We had a loss, and that's why the prediction market's more than likely. So they got to regroup. So I'm pretty sure the 50 is what I have to sell here. How many do I have? 50 and I don't know what the other one is. The 50 and the 37. So 32, that's not too bad, but I'm not too happy about having 200 shares of this. But it's a risky stock, so maybe I can get something out of it. What was the first one? 50. Oh, that's bad. Yeah, 5%. Not, and this doesn't pay a dividend, so this has been eliminated from my top 20, but I'm stuck with it. Hopefully until next year, and then it'll sell. That should sell. Come on. There's a big slippage there, but maybe not. Yeah, there it is. Boom, 246. Ended up selling. Nice. And then 37. So there's over a 10% there. So hopefully these average out to around 10%, and then I'm not too happy. I mean, I'm not too sad because I just made a couple $100 that I'll be able to put back into the market. $700 that I'll put, almost 800 that I can put back into the market. Yeah, it's gonna sell immediately. Bam! There's a big slippage there. Come on, kick it back up. There's such a big difference between this and what I'm trying to, such a big difference between this and what I'm trying to sell it for that I want to wait a second. However, can't wait too long. So I sold it at 565. Let's drop down to 560. That explains why the margin looks so high. Come on. Yeah, it looks like it might be 530. Still pretty high, but not where you want it. Let's see. What does it say? 555. Let's try there. I don't know where the sweet spot's going to be. I'm really hoping it's not at 530. It is down. Not a great day for DraftKings. Come on. Give me 550. That's a good price. Yeah. All right, cool. 550. Let's do some math there. So that's 8,700 divided by, let's go with 240 plus 550 divided by 8,700. 9% plus what, $790 that I get to play with. Not bad. I'll take that. For having two bad picks, really. $10,000 worth of bad picks. All right, we're getting through them. We're getting close. Okay, UPS 106. That's not bad because I'm pretty sure mine expired at 120. Had the $90 call, execute, fire. Look at that dividend. Love this one. This one pays such a high dividend. 6%. That, I mean, just the dividend alone covers the margin loan. So let's go look. That's not what I want. January. And what I say, 120. I'm almost positive that's what it was. 90 and a 120. Yep. Bad year. And this looks like I'm going to make 6% off of this plus the 6% dividend. So 12% off this stock. And this one I will be getting back into hopefully around that $90 range again. 680. Yeah, I'll do 680. That should sell. Come on. So I'll have to go to 675 if that doesn't sell. I want to see while I'm waiting for that one what it is. There it is. Sold for the 90. I could make 4% plus the 6%, 10% on the 90. That's a winner. I'll be taking that. Don't mind making a 10%. And then if it goes down to 120, 110 again, or even 90, I could sell it down here. I'll take it. Once I have enough money, because this one is one of the large stocks that consumes a large part of the portfolio, 10% just with 100 shares. 10% is 20. So 5% just with 100 shares. So if I buy 200 shares, I'm automatically at 10%. Even now, it's still at 8.17. These are the stocks you have to be absolutely careful with because these are the larger ones in your portfolio that you want to grow into. So like UPS and Walmart and Nike were the three big ones that I dove into last year, which took over maybe 30 to 35% of the portfolio, which makes it very risky. However, However, I'm just a big believer of those stock, and I was getting dividends off of all of them. So I was okay taking that risk, but very, very risky. Look at what happens. Not all of them pay off, but I do want to grow my portfolio so where $10,000 doesn't take up 10% of my portfolio or 5% of my portfolio. It takes up 2.5%, 2%. So that way I can get into 300 shares of UPS and these bigger, safer, more reliant stocks. All right, did I already sell it? Yep, 120, so let's move on. Gossamer Bio. This is one that me and my friends were just investing into because they have some treatments that they're getting a lot of publicity for. No dividend. This was more just some fun trades, and they've gone pretty well. Turns out that my friends were right about this stock for the most part. They were buying it like $1. Now it's at like almost 3 and fluctuating. Some point it was in the cents, I believe. Yeah, look at this. And so there's some profits here. However, again, this was more of just fun. We still have the $1 call for February 20, and then I had a $2 call, I believe, or a $3 option that's what expired. So let's see, $3 expiration. Yeah. So this one is actually a really good trade, but again, not really worth spending too much time on. This could be one that you get into if you want to get into a risky stock at a low price, but not for me. This is just to hang out with the friends. See if 140 will get me there. Let's see. No way. There's not enough demand. Bam! 140. I'll take that. That's almost 50%. 140 divided by 300, and I didn't pay 300. 46% return. That's how you make it. Wow. Yeah, so I probably have paid for these shares and some. Yeah. Yeah. Wow. Good trade. Verizon, here we are. So I'm currently in this one. I already went and sold it for 33 just because it was such a unique opportunity, and I knew that this one was going to expire. This one is at 43, I believe. There it is. 43 expiration. And this Verizon, I love it because of this dividend, and there it is, 7% dividend, 7% just for holding the shares. Think about that from a margin perspective where I have to pay 4.9, but I'm making 7 just on the dividend. 43 is not available, so I will be selling the 45. I really don't have any desire to get rid of this stock. Would love to hold this one forever, or at least till I get into the $10,000 stocks or larger. But for now, I'm perfectly fine with selling the over on this one and collecting that 6% on top of the 2 to 3% that I'll be collecting with this. Let's try 110. 5, 4, 3, 2, 1. I'll do 109. Oh, I hate when they do this. Just do it. Thank you. Okay, sold. Tilray. This has also been a big loser for me. This is when I was chasing volatility early on. It's one of the first stocks that I started trading. And since then, it has just done reverse split after reverse split to the point my shares are just worth nothing. I have 180 shares. Let's just see what expired. I think it's the $20 call options that expired. So it's just not. These 3.5. Seriously? So the expiration was a $350 call expiration. That doesn't make sense. 94, 350 when my average cost. That doesn't make sense. Looks like might have to skip this one. Well, I think I was at 20. I'm gonna have to look into this one more. There was no way that was 14 contracts at 350, so maybe, well, that would make sense if I had 14 contracts at that price. I don't know why I did that. I have no idea. This is a good one. No idea what this one is. So I'm just gonna sell the $30 option. Well, let's do this. 3,500, 350 times 14 contracts. $4,900. Jeez. So, yeah, let's just sell the 30 and call it a day. This one was a loser, and I don't know what to do. But I'll take a little bit of money off of it. There's no way this hits 30. It'll probably do another reverse split by the end of the year. If I could have gone farther, if it would have gone up. Nope. All right, Hecla Mining. This one I think I'm already in just several positions with. 27. Yeah, I saw the silver run, and so I've been diving into it, slowly getting into it all the way from 15, 22, 20. I had a 17. I guess that got assigned. I wonder, yeah, I think everything had to get called because I had quite a few. Well, what happened to the 17? I know I had a 17. Assignment, 19 assignment. Perfect. This is probably already 5% of the portfolio, 12% at the moment. Yeah, so once we lower this, That's still going to be a good 7.5%. Not bad, because these will expire. This one will expire this Friday, and it's in the money, so that'll reduce it. This will expire in February, and I've got all of these awesome positions just locked in for the year. So keep going, and I'll take that 20-30% I locked in there. All right, so now that we've resold all of the contract options that expired this year and sold them into the next year, now we have to build a portfolio with what's remaining out of our top 20 stocks. Now we can take a quick look at our dashboard here and see that with zero margin right now, this is the stocks that we have. This is the portfolio that we have right at 100,000, which means that we're going to need to borrow around $99,000 more in margin to get us to that $200,000 portfolio that we want to have. And so now you'll be able to see the process of actually buying 100 shares of a stock and going to immediately sell that yearly call option. All right, so let's jump back to SMCI, because this is a stock that I've made a lot of money on by simply just getting really lucky and timing the market perfectly. This has only happened with one stock out of all of the others. So just to give you a heads up, this typically doesn't happen. But when it does, you can take advantage of it by taking out some really risky call options with basically play money, because you've already made the returns on this stock. And I've made so much money off this stock. I wish I could know, but I know that I've only sold $1,000 contract options, and almost always one expires. Okay, so I'm going to try to lock in this 10% here. Don't want to go too risky, because remember, I have that 41 up here, and that's going to be very hard to reach. And this stock doesn't fit my portfolio. So I'm actually trying to get out of this stock. So I don't want to run the risk of it dropping by 50% and me being stuck in this option and me being stuck with this 200 shares of this stock. I would much rather be stuck with 100 shares of this stock, because I'm pretty sure I've already paid for all of those shares and it's just free shares sitting in my portfolio. All right, so this is your first lesson on covered option selling. First, we're going to buy the 100 shares. Before you can sell an option on this, you have to own the 100 shares. I like to put a limit order, that way it doesn't immediately buy at whatever market price is going in case there's a lot of volatility. So I'm just going to buy this here at 31.34 just for immediate purchase, and I'm going to buy 100 shares. Oh, just dropped to 33, so I'm going to drop to 33. Save me $1. Oh, actually we got to do something first. Okay, so first we need to increase our margin to be able to purchase the additional $100,000 worth of shares. And this is awesome, because last year I had to take $136,000 out on margin. This year I've only got to take really $100,000. And that is how you can use your margin. The reason I love this margin here on Robinhood is because of the annual rate. Right now it's at 5%, and once I start using that money, it can drop as low as 4.8% right there, which is where I plan to get to today once I get to that $100,000 range. Okay. All right. So we need to buy here at 331.34. I'm gonna put, that looks like it jumped to 135 or 35. So I'm gonna put 4 up down to 3. Let's just leave it at 3. Execute at these 100 shares. That's going to cost me $3,133. Buy and see if they should execute. There's a little volatility there, so I'm hoping that it'll drop back down. Looks like as soon as my order went in, those prices jumped. So it could be someone trying to bait me in. I don't mind. Again, you're getting some pretty high returns. So purchased. All right, so now that we have those 100 shares, going to quickly jump over here and see this option here, since we've already chose it, and now we're going to sell this option. Okay, so this one is the one that we're going to choose. See what the demand is here real quick. There's a big spread. I'm going to look for maybe a smaller spread at the 18. Still a big spread, so we'll go with 20 and call it a day. I'm going to go here and put in 1,500 or 15 and see what happens, because of that spreads between 70 and 15.25. Boom, sold, and it's sold at 15.13. Okay, so what just happened? All right, so we're gonna go through that really quickly just so you can see. So we bought the shares here at 31.33. So let's do some math here. 31.33 times 100, right? 100 shares. That's how much we spent. Okay, next we sold that option for 1,500, right? So now what we want to see is how much money will we make off of this trade if SMCI stays above $20 until January 17th of 2027. That's the date. January 15th of 2027. 1513. Okay, so what that means is that I purchased the shares for 31.33. We're going to redo this and add a negative. Negative 31.33 because we purchased them. So that money went out. Now, what happens if SMCI stays above 20 throughout January 15th of 2027? Well, that contract is going to be executed and my stock will be assigned. That means that I will be forced to sell my 100 shares for that $20 stock price right here. $20 stock price. So that means that I will be getting $2,000 back if that sells, which means I'm still in the hole $1,133. However, I sold this option for $1,513. So let's add that. $1,513. Now you're at $380 of a surplus, right? So you have $380 that you're going to be able to keep, and you invested $3,133, right? $3,133. So you divide the two, and now you have your 12.12%. So off of this trade, if SMCI stays above $20 after January 15th of 2027, then you will lock in those 12% returns. And we're done with that one. All right. Okay, so this is a unique case, and this stock is out of my portfolio, out of my top 20 portfolio. However, I'm stuck in it, and I would like to sell it for a profit at some point in the future. But I bought this at such a high price that the odds are very unlikely that I will recoup my cost on this. However, I had to sell the option here for the highest possible, which really I needed to be in the 40, I believe, and this only goes up to 50. I needed to be in the 20. I needed to be in the $20 call option here, but they don't even have it because it's so high that no one is betting that it'll get there by January 15th of 2027. So what I'm going to do here in this particular case is I'm going to buy 100 shares, Space or Virgin Galactic Holdings, and I'm going to combine the two and take the average. So I'm going to put here 304 and I'll buy 100 shares. Hopefully someone will take it. Order placed. If not, I'll put it 305 just for the sake of time. I'll wait a little bit here. Okay, did I buy those? It looked like it said purchased. Sometimes it can execute without you knowing, so always refresh. It happens really fast. Sometimes it can happen right before you hit the cancel button. I don't want to buy 200 shares of this. Okay, that should be purchased. We're purchased, and now we will go over and sell. So now what we're going to do is take the 20 that we should have sold it for, plus the 305 that we bought it for, and divide that by 200 shares. Oops, it's 2305 divided by 200 shares, and that's 1152. So we could sell the two $12 options here, and if it jumped above 12, then both of these would sell, and we would at the very least break even, if not make a profit, because we still sold options the entire way down. It's gonna be 28, and this is how. Let's put just 28. Don't care. That, come on. Got some scalpers over here. 5, 4, 3. All right, so 27. Wow, there's no demand for this stock. Let's see how much is out there. Yeah, one volume. Well, there's still 1,500 shares out there. Even at that price, it won't sell. That's crazy. So we'll sell it at 26. There it is. Okay. All right, and these are sold. And so this is a way where you can make a really bad trade and lower that dollar cost average to try to get it in a good position. So if there is a spike, or you truly believe in the stock, that one day it'll at least hit those levels where you can sell it at a profit or at least break even. This one's a long shot though, I'll be honest. This one's a long shot. All right, so now we can go into our top 20 and just look. And this is much faster because this is just going into the stock and trying to make a quick 10% or whatever you think is a good option to sell. So what we're going to do here, This is going to be the riskiest stock that I make a pick on this year. I don't think we're ready for this one. I'm going to skip this one. That's just so high. All right, Agree Realty. I had this stock last year. It looks like it got sold. But again, it's another real estate stock that pays dividends, really good dividends, I might add. 4.21% dividends. This is more focused on the commercial area, retail properties, which I've been told are very risky at the moment. However, I do like diversifying my portfolio, and I still think when it comes to commercials, there is a lot of vacancy now because of the work from home and things like that. But I do believe that commercial is a lot of upgrading and downgrading, never really disappearing. You always have to have a hub. So it's really the money stays within that commercial real estate sector. I could be wrong, but I'm going to keep investing in Agree Realty. It still has some really good earnings. So my price is going to be $73.50, and let's get 100 shares. While that's happening, see if we can open this up and start looking at the option and see how there's not much demand on this stock, that this only goes out 178 days. And this is all right. These are the real estate stocks. I just like them because they pay those monthly dividends. So I don't mind. That was at 4. I could get an extra 3% for July for this, and that's exactly what I'm going to do. Wow, there's no volatility here. This did not move at all. No one wants to sell at that price. That's a little crazy. By 1 cent. 52-week high was 79. 52-week low was 72. Wow, am I really going to have to adjust this for 1 cent? Yep. Okay. 73.51. 100 shares. No way. Jumps up. These are the scalpers. The scalpers, they see me trying to get an extra $1 out of me. Well, they make a lot more, but come on. Seriously? Wow. Okay, purchased, and now I'll sell that $70 option, $5.75. Hopefully it doesn't go down. Might be. Oh, it's 10-cent upgrades. All right, well, yep. I think I'm gonna have to go to the 570, 574. All right, and it dropped to 49. Of course, I probably helped push that price down because of that short. Oops. All right, next. So now we have that one. What else we got here? So I do want to get into Pan American Silver. I hope I can get into that. Got to go back to my Dollar General. This one just outperformed the market substantially last year. I missed out on so many gains. Just look at this. I think I bought it here. Yeah, January around $70, and now it's at what, 140? Yeah, it just doubled. I could have made 100% if I would have just bought the stock outright. But I love this stock, especially during recession fears, because you can get a dividend if you have to hold it. And during a recession, the people go shop at this store more and more. Wow, so this one's a tough one. What is it, a 1%? I think I'll sell this one at 110. Scoop of 6, make 7. Yeah, I mean, I bought it at 70. What are the odds? Could be way overvalued. And I don't want more than 10,000. So if it drops this, I'll be in a good spot. It'll be 106. Let's keep looking. Not realize the price was going to be that high. Kroger, don't mind. Same thing with Kroger. Kroger didn't actually have much movement at all. So it did end up selling in the money, but I mean, maybe by $1 or $2. Like this one. Yeah, I got assigned at 55, so not much of a jump there. Let's see if we can get the 65 again. Oh, come on. I should purchase immediately. All right, well, that's happening. Let's go look at the option market. When I say 55, I can make a 4.47 return, and 4.47 makes 6 right there. I think I'm going to sell the 60 and make the 8. That'll put me at around 9%. I'll be okay with holding that there. Oh, wait. Oh, did it? Looks like it executed. Yep. Okay, cool. So we're in. So we're going to sell the $60 option here. 855. Let's see what happens here. A lot of spread there. So what just happened? So let's do the math again. I bought it at 633. 630 looks like. So negative 6330. 6330 plus the $60 option. If it expires in the money. I'll be forced to sell it for $60 plus the $855 that I just sold the contract option for. That'll leave me with $525 if the stock stays above $60 by January 15th of 2027. Divide that by the 6330, and we just locked in at 8.29%. And just for holding those shares for the year, we'll make an extra 2.12 dividend. Plus 2.12 dividend, oops, 0.08 0.829 plus 0.0212. 10.4% dividend right there. Excellent job. Next, Walmart. Good old Walmart. Love it. 6.0. Wow, 6.3. So that's the volatile. It's jumping around. We're going all in on this one. I don't mind. It's Walmart. I'm a huge fan. I think that'll sell. Well, someone will buy that in a second. Wow, it's going up. I would really like to sell the 100. So that's probably where I want to be. Last year, I think I sold the 85, which was really wrong there. But I like the 100. Psychological mark. Make 5.8% there and 0.79%. So maybe 6% here. And I'm okay. I really want to catch Walmart off guard one year where I get to keep those shares. I want to keep them, but I want to keep them. $10,000 is a lot of money to keep holding and then have to buy another one. That'd put me in that $20,000 range. Again, 10% of my portfolio. So until I get there, I want to be pretty safe with these large stock risks. Wow, did it just go on a run? Jeez. Wish I would have got in this $20 run. Yep, it's coming down. I'll do 178. Come on. Let me get it. 7.8. Come on. Come on. Go work on this. What did I say? I'm going to sell the $100 option. That's fine. They're trying to bait me. All right. Well, they're baiting me. And I don't have time to play. I'll go 180 or 80. Buy 100 shares there. It's going on a run. All right. I'm going to leave this one right there. And we're going to go to a different stock while we wait. Because I just saw that jump. It's got to hit. There it is. What did I say? Okay. So that's sold. And we are going to sell the $100 option here. That's going to be 25.80. What's the spread here? Between 25.20 and 25.26. Let's just go ahead and hit it with a 9 guy and see what happens here. Yep. Probably could have sold it for more, but I'll take it. That's a nice little 6% plus the 1% you might make off of it, so 7. But I'm cool with that because I'm hoping Walmart will, for some reason, at the end of this year, before the end of this year, drop below that. And look at this run. It could very easily. All right, Coca-Cola. Can't leave that. Ooh, I love Delta, Bank of America. Got to knock these out. Our funds are running low, so got to start being choosy. Decided to go on a run today. Love it because I wanted to sell the $70 call anyways, so maybe I can get a better get a premium at least. Something. 54. Ooh, 53. So let's put 52 there. Oh, whoa. I want to do that. Oh, those are the shares. That's why. 71.53. I'll do that. And there's not going to be much dividend. Again, these are the safe stocks, so the dividend, I already bought it. The 71.53. These are the safer blue chip stocks, so you don't get the dividends that you'd quite like. But that's where I get into the riskier ones with the higher dividends because they balance out with these, and at least these cover my margin. I wanted to sell the 70. I had already made up my mind on this a while back, so just jump in. So 593. Let's go 594. See if we're feeling a little frisky. It's 595. All right, $5 increments. Let's see what happens. Sold. Perfect. That's another 6% there, plus the dividend. 6 plus 7, 8, almost 9% there. Probably 9% there. That's awesome. Off Coca-Cola. And if it drops, I don't mind buying another 100 shares of this. This is only 4.2% of the portfolio right now. Once I invest more, as I continue to buy more, that will go down to around 2.5%, hopefully. All right, still keep going. Let's go to our other two. I want to get Bank of America and Delta Airlines for sure. I can't believe all of those sold out of the money. In the money. That's insane. I made some killer profits off both of these. This one, let's sell the 50 on this one. What got assigned? Yeah, the $50 got assigned, so let's just jump right back in the 50. And if it drops again, we'll go sell the 42. I have no problem keeping these. I thought that immediately said purchased. I put 42 and it jumped up to 43. Sell the 50, make 10%. Ooh, that means the premium's a little high, or a little low. Dividend of 2%. They see it dropping, so I get 8% off of this. I think that's what I'm going to do. No, I like it at 50, despite everything that happens. It could drop as low as 40, and I would buy more. So we're going to do this risky one. Wait, have I bought the shares yet? If I do 50, yeah, I like it at 50. These are the cons of Robinhood, because I feel like they are feeding these orders to someone else so that they can just scalp, make an extra dollar off of every single one of my trades. And that's very annoying. But I don't know if that's the truth. I just feel that way. Purchased, cool. So let's sell that one. Oh, I'm in the middle here. I think I'm gonna have to split the difference. Nah, we'll go. I don't mind keeping them. And I think $50 a share is more than fair. But I could go 45 and lock in 6. Remember, we want to be short here. I'm gonna go 42. Wait, that looks weird. That means there's a lot of slippage here. Yeah, we're gonna have to go 45 because I want to bet at the top. If they keep going, I want to be able to get those and get stuck in those. Or do I want that? So it drops down. Yeah, I like that idea. Going back 50 because I'll definitely buy 100 shares of this if it drops down. Oh, come on. You're messing with me. All right, let's try 740. 735 it is. Come on, give me that. Yikes. So 730. What does that bring me at? 9.26%. That's fine. Go. Price lock there. Bank of America is sold. Let's go. All right. So we've got Delta. Do we have Delta? Nope. Delta next. And then we should start running through these pretty quickly. These start to get a little... No. Chevron's the one that's going to get us. Yeah, I can't believe it was at 70 at one point. That's insane. This I can buy at any price. I'm going to probably get it at 55 or 60. Honestly, I think it could stay at 60. All right, so let's go look at these. Oh, I can make 10% at 60 or 10% at 55. That doesn't make sense. That's a big spread. Okay, 55. Yep. So it looks like 60 might be the call here. That's going to be the call. Take 11%. Jump to 90. I guess it's super low. So playing me, bro. No, I'll put 67, 90, and we're moving on. No, that is not going to stay up there. I guess it did jump up a lot from today. So yeah, maybe. Yeah, looks like that's going to be the price. I need to move on. 01, 100 shares. I know it'll sell there. Dude, a lot of price action going on in there. All right. So what I say, the 60? Yeah, for sure. Done. Delta's done. All right, we're locking these in. Locking in our picks. All right. Tyson Foods ended up jumping up. This one I thought was a little worried because it was out of the money the entire year. And then there you go and go do something like that. Must have been a lot of squeezers at that price range. I'm just going to put a flat 61 there. Yep. I'll exit. All right. Anyways, did I buy it? I got distracted. No. Okay. Let's go see what we got. I'd like to sell the 57.50. That's what I sold last year. Oh, even better. It dropped to the 61, 610. Wow. Done. It's a nice little 8%. Plus this pays a good dividend, I believe. So they make Chick-fil-A's chicken. You gotta, yeah, 13%. Let's keep that in. Not too happy with that trade. I wish I would have got it at 57.55, but that's fine. Fine. All right, our good old BP. So we're getting back in our petroleum. Might as well jump into Chevron soon too. Tractor Supply. These are going to be, minus Robinhood, these are going to be all new ones. Pan Silver, haven't done that one. Dollar General, Robinhood Markets. Yep. These are all going to be the big dogs. Let's try to get $1 back on this one. Oh, we are. Nice. Let's see what we got here. Let's go with nice little 4.95%. I'll take that. 32, 5.05. Ooh, 5.08. Update to 510. Let's do it. I wasn't sure about that one. There's not much demand for this stock. Let's do that. Okay. Sold. All right. What's next now? So now we've got, I guess we're on Dollar General, Robinhood. Let's get back to Robinhood. Wow, that dropped. Is that always at 100? The last one I sold was at $75. That must have had a big drop. All right. Wow, it has dropped a lot. Oh, wow. This is perfect. I would love to buy this at this price. Now, this one is such a popular stock. I'm going to play around, put 34 there. While we try, look at that, I already dropped to 130. So let's do 30 there. I'm going to see what we can get into. Yeah, I'll buy it at, oh, no. 25 is what I bought it for. And this one doesn't have a dividend. So we've got to get some good returns just right out of it. And we're going to go for 75. I can see this dropping down to 70. This is where the last one that I sold. So I'd like to jump back into that one. Plain and simple. 11%. Yeah, not too shabby. But I could lose 1% and come down here. It's 1.3%. I think I'd rather have 70. What's the split here? $70, 140. What's the split here? $70. So let's exit out of this. I'm gonna try 71, 47.50. I'm gonna put 47.50. See what happens here. Wow, sold. Wow, those always get my heart rate up. I mean, that was It's a $10,000, $20,000 swing there. $10,000 in stock, sold that $7,000 option and that. So these are the big trades. These are the ones that get your heart racing. Times 100, that's 10,625 bucks. 2 times -1. Now if we sell, -10,625 plus 7,000 plus 4750. It's $1,000 we'll make there. 1,125 out of 10625. That's your 10%. I'll take it, and we're in. Okay. Dollar General. I'd want to skip that one because that's just so much money. Well, it's one of the safer ones, so let's go for it. They're all risky at this point. How much buying power? I've got 35,000 left of buying power. We're just gonna go 10,000 of it right here. I think this is just out of my range. I can't do that. Let's go Pan American. 1,400 is just out of my range. 14,000, I mean. This one was going to be the risk taker of that one, but we'll have to see. 58.10 is, or 12 is where I'm gonna go while I go search. I think this will sell or buy. See what's good here. I haven't done too much research on this, but I wanted to get more into silver. And this is how. Let's see what we got here. It's gonna go easy with a nice 40 guy. We're pretty low into this now, so we got about 29%. So we can go a little riskier. We'll go to 50. Any lower, we're buying. Let's go with 50 here. See what happens. Oh no, 45. Update to 750. Go ahead. 5, 4, 3. Yeah, I didn't think that would happen. Let's go to 40. Dang, we're gonna lose a lot here. We ain't gonna lose, but 1730. Come on, that should sell. Someone must have really. These are those stocks though. Jeez, eating away my margin. 20. Come on. Yikes. They're hosing me here. 15% still. What's the. Oh wow, this cleaned up nice after that. So yeah, it's really, this is where the mark is. 5, 4, 3, 2. Who's entering? Last call. Okay. 1715. You're gonna make me update? Yep. Let's try 1720 one more time. Nope. 1710 it is. All right. Now we're in Pan American Silver. Only 1,700 bucks. So let's see how it goes. That'll be a good one to trade. And the Freeport-McMoRan. And there's 6K there. Purchased immediately. This is the copper mine that I want to get into. Looks like you're right there at 59. Do I want to sell this one or this one? We're gonna sell sell the 1310. And selling this one. Well, they pay a dividend, so what's the dividend? You know what? These are my risky stocks. This is what I want. But 10, 11%. We gotta chase 15. Remember, bro. 1%. Yeah, we're going 50. 1590. Yep. Damn it. 1570. Fine. Get me out of here. All right, 1570 locked in. Let's get it. Next, Tractor Supply. All right, what's my looking like? Buying power. What are you actually at? No way, you're still at 35. Oh, okay. 26. Still got plenty. We might actually be able to get all of them. I don't know if we got Dollar General, but if we did, then we're in good shape. Okay, well, you figured that out. Oh, you're not gonna. We're gonna one-up me here last second. Oh, let's go check. So I'm a big fan of Tractor Supply because they've been in business for a long time, but above all, because of this new Big Beautiful Bill Act, I expect a lot of machinery to start being moved and expensed. Let's go with the 46. Let's go with 46. Whoa, there's a big split there. So I'm gonna edit this. Let's go with 900. See what happens. Let's just see what happens there. Give it to me. 900. Bam. All right, Tractor Supply in the bag. Cal-Maine Foods. This is like the owner. I believe this is the owner of Taco Bell, but if not, it's like Kellogg's or stuff like that. You know, big box brand owners. And I wanted something. Distribution, yeah, I think Mills. I think it might be the General Mills. Looks like it's down. This looks like a good dividend yield of 11.9%. That cannot be right. That cannot be right. Let's see, where is it? Eggs. It owns something. I just can't think of it. But anyways, we'll go at 76.35. We'll go 100 shares. Quick buy. Oh, it doesn't go out. Ooh, I should have looked at that first. But we'll go ahead and take it. Well, that 11% freaks me out. Okay, it's not all year. Not too much interest there. Gotta sell this. Come on, give me that. Give me 15.20. Give me 15.20. Yeah, let's go with 15. Nice. All right, in. All right, we've got 2 out of the 20 left. And those are the 2 largest purchases. How much buying power do I have left? 16,000, almost just enough to buy Chevron. 16, wow, it's like it's meant to be. We got to do it. Wow, I mean, there's nothing. 166.10. This has got my heart racing. So let me go do some little bit of research here. Yeah, I'm gonna go with 0.5. Put 100 shares there. I'll buy that. Purchased. All right, here we're in it now. We are in it to win it. This is gonna be the trade of the year. Okay, let's lock in a nice little 6% and just call it a day here, because this is scary. Let's go with 21 here, and I'll be happy at 21. Oh, let's go with 21.20 again. See if I can make that up. Come on, give me that 21.20. Okay, I'll take 21. Give me 21. Oh, this keeps going. All right, what are we still at here? 5.7. All right, I can take that. Keep going in $10 increments. Bang. All right, they're just gonna keep beating me down. These are the good stocks. These are the big ones. Come on, give me 20.80. Yeah. All right, and we're in, man. That's it. Looks like the one that got left out of the top 20 is Dollar General, which it's good. If it was in a recession, I'd be more prone to buy that one. So let's get rid of that. And now we have our top 20 shares. Top 20 stocks that we're going to be focused on this year. Okay, so let's check it out. If you look, total margin used 97,000, margin total 100,000. Let's see if we can see. So now you can see that I have almost $200,000 in assets or holdings, and now I'll be using an extra 50,000 of margin to play within those stocks depending on where those stock prices are throughout the year. Some of them might be horribly wrong, which gives me an opportunity to buy a dip and sell it for weekly call options instead of these yearly ones, to play throughout the year to try to get to that 15% or more. And I do that by selling weekly call options. So to recap, you invest your money up front with the yearly call options. You keep some capital aside. That way, throughout the year, as prices fluctuate, you can take advantage of discounts and continue investing within the same stocks and selling shorter term options like weekly call options where you can make 1% per week. All right, that's it for this video. I hope you liked it. Please like and subscribe so that you can join me on this journey as I continue to trade these options throughout the year and see the advantages of waiting for the discounts to come to you. Thanks. I'll see you on the next one.